Thank you so much for your attention. Without further ado, let's start our presentation.
The Coca-Cola Company is an American corporation that was established in 1892 and is currently focused on the production and distribution of syrup and concentrate for Coca-Cola, a sweetened carbonated beverage that is a cultural icon in the country and a representation of American tastes around the world. Coca-Cola is the largest beverage manufacturer and distributor in the world and one of the largest firms in the United States, with more than 2,800 products available in more than 200 countries. Coca-Cola franchise dominated with a market share of 48% worldwide. Within a market of 200 countries, the franchise is in charge of about 160 distinct types of beverage. Coke, Sprite, Dasani, and numerous other items are examples of their offerings. Analysis and interpretation of financial statements of the Coca-Cola Company has been taken from year 2020 and 2021. Through the process, we can look at the first section of the financial statement, associating the section with each section other and to the above picture, and determine whether any meaningful and useful interpretation can be made from this analysis. So that's all for the introduction for our video presentation. I will pass to the next presenter, which is Nurul Huda.
Okay guys, as per attached, this is Coca-Cola income statement and balance sheet for 31st December 2020 and 31st December 2021.
Thank you, Nur Shahida. Hi everyone. My name is Nurhuda Sabiha binti Muhammad Rusti with ID number 2020456112. Right now, I will share about comparative horizontal analysis of Coca-Cola balance sheet. The detail is from Coca-Cola 31st December 2020 and 31st December 2021 balance sheet. First of all, accomplishing the comparative horizontal analysis of any item, subtotal or total showing up in a financial statement wasn't the most challenging part of a comparative horizontal analysis. The tricky aspect is determining what the analysis is informing you. As in the table shows balance sheet information for 2 consecutive years, as well as the identification of each item, subtotals, and sums for all assets, liabilities, and also stakeholders' equity. Furthermore, 2 new sections has been added for comparative horizontal analysis. First is to show the dollar amount difference, and the second one is to tell the percentage difference. Alright guys, as I have counted, absolute change occurs in total current asset, which increased by 17.18%, and same goes to the total asset, which have increased by 8.09%. However, consider the cash account. The change from 2020 to 2021 is $17.11. This may or may not be a large change for a huge company like Coca-Cola, as in the percentage terms stated 15.68%. Why has the cash account increased by only 16%? However, the prepaid expenses has increased $10.78. The change become apparent when revealed in percentage terms, which is 56.29%. Also, the amount of money held in inventories has increased by $148. This may not be a plentiful in dollars, but it is an increase of 4.53% over the previous year. Has our sales volume increased enough to justify this rise in inventory levels? This issue could be answered by analyzing changes in inventory turnover rates. Thank you for your attention. Now let's move on to the next presenter.
Nurhuda, Bismillahirrahmanirrahim, and very good evening to Dr. Anderson. My name is Nur Fazlina binti Munai Kasman. My student ID 2020489192. Okay, I will continue the presentation about the comparative horizontal analysis of the income statement by the Coca-Cola. Okay, the table to display Coca-Cola annual cola income statement for the previous 2 years is 2020 and 2021. The balance sheet is examined using the same methodology as the revenue statement. Okay, find the numerical value change line by line, the multiple it by the period year to obtain the percentage change. For the instance, Coca-Cola saw a 17.1% growth in the sale of the Coca-Cola gas drinking water by the revenue between the years 2020 and 2021. Okay, next, the conclusion. This is clearly shows in the income statement that the operating expenses are the highest, which is an increase of 4,300 ringgit from 2020 to 2021 or 17.8%. Okay, this is because the cost of the expenses is very important for a company to start the business operation. Okay, Coca-Cola is the one of the leading company in the world. The expensive to start the operation are hard, and the result of this expensive lead to a good profit. Okay, that's all for me. Thank you. I will pass to the next presenter.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nora Dila binti Khalid. Matrix number is 2020470998. I will explain about the question 2, which is conduct a performance analysis by using the following ratio categories. Or short-term solvency ratio, where under it there are some ratios. First, current ratio. The formula for current ratio is current assets divided by current liabilities. So from the balance sheet of Coca-Cola Company, the answer for this ratio is 1.13 ratio to 1. The comment for this current ratio is for every 1 ringgit short-term obligation, the company has 1 ringgit and 13 cent of cash and other short-term resources to pay for the financial obligations. As comparing to the industry average, which is 1.3 ratio to 1, it can be concluded that the company is comparable to the most of the industry players. Second, quick ratio. The formula for quick ratio is quick assets divided by current liabilities. For the quick assets, we have current assets minus closing inventories minus prepaid expenses. So after we minus these 3 quick assets and divide with current liabilities, the answer that we got is 0.81 ratio to 1. The comment is, for every 1 ringgit in short-term obligation, the company has 81 cent in quick assets to pay for its short-term obligations. As comparing to the industry average 0.9 ratio to 1, it is noted that the company is efficient in managing its short-term transactions. Next, account receivable as percentage of revenue. The formula is average account receivable divided by sales revenue. The answer based on the Coca-Cola Company balance sheet is 0.86%. The comment is, of the entire sales revenue, the company only gives small credit sales as compared to the cash sales. It is a good practice to have a small credit transaction as compared to the cash transactions. By looking at the industry average 25%, the company is effective in making cash sales. Then, account receivable turnover. The formula is sales revenue divided by average account receivable. So, the formula that I just talked about before just needs to be changed for this ratio. The answer that I got is 11 times, and the comment is, based on the sales revenue, the company has the ability to collect its debt for 11 times. In account receivable turnover, the frequent number of collection of its debt will give them advantage in holding more cash. By comparing with the industry average 110 times, it shows that the company is not good in establishing credit sales. Last is average collection period. The formula is 365 days divided by receivables turnover. The answer that we got before for receivable turnover is 11 times. So 365 days divided by 11 times, we got 33 days. The comment is, the company needs 33 days for collection for its debt. It can be concluded that the company is not good in collection of debt as compared to the industry average. That's all from me. Thank you.
Hi everyone, my name is Nur Fahna binti Muhammad Saini. My metric number is 2020853046. So let me continue our presentation for today, and I'm looking forward to talk about long-term solvency ratio. The first one is total asset to total liability ratio. We divide it into 94,354 with 69,494, and the final answer is 1.4 per 1. As conclusion, for every 1 ringgit in financial obligation, the company has 1.4 ringgit to pay for the financial obligation And as compared to the industry average, the company's performance is slightly lag behind. Number 2 is total liability to total asset ratio. We divided total asset with total liability, which is 69,494 divided by 94,354, and the final answer is 0.74 per 1. In conclusion, every 1 ringgit resources that the company has, the company needs debts of 0.74 ringgit to run its operation. The company is more higher than the industry average. Number 3, net income to revenue ratio. We divided net income with sale revenue, which is 60,667 divided by 70,280, and we will get the final answer, which is 0.24 multiplied by 100%, and we will get 24%. As conclusion, from total sale revenue year 2019 and 2020, the company can generate 24% net income. The company can generate quite satisfactory net income from its sale revenue. As compared to the industry average, the company is not better off in this ratio. It means the company needs to minimize its operational expenditures. Number 4, net income to asset ratio. We divided net income into total average asset, and we will get 0.84 multiplied with 100%, and the final answer is 84%. As conclusion, with the total investment in asset and the short-term resources that company has, it can generate 84%. The company is efficient in generate return from the investment, and the comparison with industry average confirm this conclusion. Lastly, asset turnover ratio. We divided sale revenue into total average asset, and the final answer will be 3.54 per 1. As conclusion, for every 1 ringgit investment in asset, the company can generate 3.54 sale revenue. It means the company can make 3 times revenue for the investment on the short-term asset that it has invested. The company performance is better than most of the industry players.
Thank you to all presenters. As a conclusion, the financial performance of the Coca-Cola Company has been displayed in different areas in the financial statements. Furthermore, we were able to relate the sections to each other and to the overall picture and determine whether any relevant and useful interpretation could be formed from the study. From question 1, we have been doing the comparative horizontal analysis which has been made between year 2020 and 2021. When prior and current period statements are supplied, we can detect the differences between the 2 subsequent years or periods. The financial statement examination is then continued in question 2 by reviewing major financial and other various ratios with the goal of collecting indirect knowledge about economic operations. That's all from my group. Thank you for your attention.